In this video, we'll explain this Washington State long-term capital gains tax and how it applies to you. If you don't know who I am, my name is Chris Dime. I'm a certified financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. So on March 24th of 2023, the Supreme Court upheld Washington State's long-term capital gains tax of 7%. And they upheld it as lawful and enforceable. So in today's video, we'll talk about who's going to need to pay this tax, on what assets, what's the purpose of this tax, where's the money going to, and then some future developments and some things to have on the periphery. So let's jump in. As a quick background, starting in 2022, Washington State started enforcing a Washington State capital gains tax on long-term capital gains of 7%. And this 7% applies to things like stocks, bonds, business interests, etc. And that means that in April of 2023, that's going to be the first tax filing season that Washington State will start collecting revenue off this tax. I'll link below to the Department of Revenue's website on this, as well as the RCW and the WAC specific to this long-term capital gains tax. If you have questions, you can look at that for more information. The reason there was so much controversy over this Washington State long-term capital gains tax is because it flirts pretty heavily with a Washington State income tax, and Washington State doesn't implement a state income tax. However, in a 7-2 majority Supreme Court decision, it was ruled an excise tax and not a tax on the income of Washington residents. So who's going to need to pay this tax? Ultimately, this tax only applies to individuals and families. It does not apply to businesses who might generate long-term capital gains as part of the normal course of action within their business. There are also a few deductions and exemptions to be aware of when figuring out if you'll owe money on this tax, so we'll jump to that next. So as far as deductions are concerned, deductions are essentially just if you generate long-term capital gains tax, here's how much you're allowed to deduct from how much you recognized in long-term capital gains to see if this tax applies to you. The first, and in my opinion, most important deduction is that each individual and family unit is entitled to a $250,000 standard deduction from long-term capital gains. This means that an individual who generates $200,000 of long-term capital gains will not need to worry about the 7% tax. However, the difference between this standard deduction and most standard deductions on the federal level is if someone is entitled to $250,000 and another person is entitled to $250,000, if they now become married, their standard deduction does not go up to $500,000. It stays at $250,000 per family. This is unique because a lot of times in the tax code, two individuals might have particular exemptions or deductions up to a certain limit, but then when they combined as like a married filing jointly couple, then those two individual exemptions get combined together. This is not the case with Washington State's long-term capital gains tax. So as a quick example, let's say a family generates $300,000 in long-term capital gains. The first $250,000 of the $300,000 will be deducted, and that will leave $50,000 of long-term capital gains that will then be applied at the 7% rate. And 7% of $50,000 equals $3,500 of tax revenue to Washington State, and $3,500 out of your pocket. There's also a charitable deduction of $100,000 as well. So something to consider as you're doing your tax planning is whether or not a charitable deduction, on top of being philanthropic, can help you reduce your tax liability for Washington State. In addition to your deductions on the sale of long-term capital assets, there are also some exemptions to be aware of. And exemptions are asset classes that are not factored into determining how much you'll owe by way of long-term capital gains tax. Again, I'll link below to the specifics if you want questions on your specific situation, but the prime movers for most of my clients are the following two exemptions. Number one, real estate, and then number two, retirement accounts. So let's jump into real estate. So real estate is exempted from the Washington State long-term capital gains tax. That means if you recognize a long-term capital gain from the sale of real estate assets, regardless of the long-term capital gain, you will not owe Washington State long-term capital gains tax. In addition, if you run like an LLC, for example, and your business generates over $250,000 of long-term capital gains, and that long-term capital gain passes through to you as a member of that LLC, if the primary reason for the long-term capital gains recognition was the sale of real estate within the LLC, you will not owe long-term capital gains excise tax of 7%. So essentially, if the business recognizes a long-term capital gain that passes through to you and it's due to the sale of real estate, that also is included as an exemption from Washington State's long-term capital gains tax. The second piece are retirement accounts. On the federal level, this is pretty intuitive, but long-term capital gains generated within, say, like a 401k, for example, those will not be assessed long-term capital gains tax on the federal level, nor will those be assessed long-term capital gains tax on the Washington State level. The Department of Revenue also includes this next line as a deduction. I think of it more so as an exemption, but I'll let you be the judge. Specifically, they say if an individual sells all or substantially all of the ownership in their family-owned small business, that capital gain will also not be included in Washington State's long-term capital gains tax calculation. Now, I am not a tax expert in any of this, so if you have questions on your specific situation, please consult your CPA or find a CPA you can consult with. This is just general information for Washington State residents. So what's the purpose of this tax? Well, depending on the side of the political aisle you end up on, you'll probably have some opinions here, but specifically what they say, the estimated $500 million of tax revenue is for the improvement of early childhood education, school systems, etc. And who could say no to giving more money to the school systems to foster a more educated community of the next generation? So some future developments to be aware of. Obviously, people on the left side of the aisle are going to say, awesome, this is a great progressive step forward in redistributing assets and resources to the community at large. The wealthy need to pay their fair share, so we're going to take 7% of their long-term capital gains and we're going to give back to the school systems and educate the next generation. Folks on the right side of the aisle are probably going to say something like, hey, this is an incredibly unconstitutional step towards a Washington state income tax, and it hurts businesses. Now, there's some merit to both sides, of course, as always, which is why our politics are the way that they are. However, as prophesized, one of the dissenting Supreme Court justices, Justice Cheryl McLeod, even goes as far as to say that this excise tax is just an excise tax in name, not in implementation. In implementation, she sees this as a state income tax for Washington State, which is why she dissented. And in fact, Washington State, according to the Tax Foundation, fell 13 states down the rungs to number 28 as far as most attractive states for business tax climates. And primarily they gave that rating due to Washington State giving up its state income tax-free status. So what are some calls to action? If you're flirting with being above the $250,000 in long-term capital gains generated for 2022, obviously speak to a CPA to ensure that your situation calls for this. But Washington State says, just like on the federal level, you will owe your Washington State income tax filing by April 18th of 2023. And similarly on the federal level, you're allowed to apply for an extension for your Washington State long-term capital gains tax return. However, just like on the federal level, that doesn't mean that the taxes owed to these government bodies is extended. Those are still all owed by April 18th of 2023. So hopefully that was helpful in clarifying how this Washington State capital gains tax might apply to you. If you have further questions, drop them in the chat below, send me an email, we'll get you squared away. Have an awesome rest of your week. We'll catch you later. Bye.